Hey everyone, welcome back to Corporate Decoder, the place where we try to make some sense of the corporate jungle, and sometimes we find a hidden treasure or maybe just a really bizarre deal happening behind the scenes. Today we're digging into a filing from Newton Golf Company Incorporated. And let me tell you, it has got a little something for everyone, especially if you like to keep an eye on how companies raise money and what agreements they're making. Also, if you are a fan of getting these kinds of insights, first be sure to hit that subscribe button and join our growing community. We've also got a Discord server linked in the description below if you want to chat more about these filings. So what exactly is this document? Well, it is a Form 8K, a report that public companies have to file with the Securities and Exchange Commission, or the SEC, when some significant event happens that could be important for investors to know about. For Newton Golf Company Incorporated, this filing is all about a new agreement they've entered into. The date of this report is the 24th of October 2025, and that is also the date of the key event they're reporting. It seems like the company has hooked up with a company called Kingswood Capital Partners, LLC. Think of Kingswood Capital Partners as the person who helps the company sell its stock to the public. This is known as an at-the-market sales offering agreement. Now, what are they selling? They're planning to sell shares of their common stock. This is pretty standard stuff for many companies as a way to raise capital or get more money to fund their operations or growth. The company can basically sell these shares whenever they want through this agent, Kingswood Capital Partners. And how much are we talking about? They've filed a prospectus supplement to offer up to $10 million worth of these shares. That is a significant amount of potential funding that could come into the company. This is happening under a broader registration statement they already have in place, which was declared effective by the SEC back in September of 2024. Here is a critical point to understand though. This agreement is not a guarantee that any shares will actually be sold. The company doesn't have to sell them, and the agent doesn't have to buy them. It gives the company flexibility if they need cash, but it doesn't commit them to anything. So while $10 million is the potential pot of money, it is not money in the bank just yet. Like many contracts, there is an exit clause. Either the company or the agent can end this agreement with 10 days written notice. This is pretty standard for these types of ongoing sales agreements. It means the relationship can be terminated relatively quickly if things aren't working out or if circumstances change. Where will these sales happen? They'll be made on the Nasdaq Capital Market, which is a public stock exchange where buyers and sellers trade shares. The price will generally be whatever the market price is at the time of the sale, or on terms that both the company and the agent agree on. It is also possible the company could sell shares directly to the agent as a principal, but that would involve a separate agreement. So why is this filing important? It shows that Newton Golf Company Incorporated is actively managing its capital structure and looking for ways to raise money. Entering into an at-the-market offering suggests they might anticipate needing funds in the near future, or they want the option to be able to raise funds quickly if an opportunity arises or if market conditions are favorable. It is a tool for financial flexibility. This filing also includes legal opinions from Faegre Drinker Biddle Sudiamp, Reth ELP. These are essentially assurances from lawyers that the shares being offered are legally valid and can be sold. It is a standard part of these filings to give comfort to investors and regulators. And the report is signed by Greg Campbell, who holds the important titles of Executive Chairman and Chief Executive Officer. This tells us that the top leadership of the company is aware of and approving this financing strategy. Now let's get to the core of what this filing implies for Newton Golf Company. This at-the-market offering agreement is essentially a way for the company to tap into the equity market for funding when needed. It is less about a one-time big capital raise and more about having a continuous option to sell shares. Think of it like having a credit line, but instead of borrowing money, you are selling ownership in the company. The amount they can raise is capped by what is registered and available, but it can be drawn upon incrementally. A key factor here is that they are selling common stock. This means that if they do sell shares, existing shareholders will see their ownership percentage diluted. For example, if they sell shares that represent 1% of the company, then each existing shareholder will own a slightly smaller piece of the pie afterwards. This strategy is often used by companies that are growing and might have unpredictable funding needs, or by companies wanting to maintain a strong cash position on their balance sheet to weather any storms or pounce on strategic opportunities. The fact that they've set up an up to $10 million facility suggests they're preparing for potential future investments or operational needs. It also speaks to their confidence in the value of their stock on the Nasdaq Capital Market, provided the sales are made at or near market prices as stated. However, there is also a risk here. If the company's stock price is low or expected to go lower, then issuing new shares at that time dilutes existing shareholders more significantly and brings in less capital. Per share sold, investors will be watching closely to see if and when these shares are actually sold and at what price. This will provide clues about the company's immediate financial health and its outlook. In my opinion, Newton Golf Company Incorporated is taking a prudent step to ensure financial flexibility. It is not necessarily an indicator of dire need, but rather a strategic move to have capital readily available. The main strength here is the flexibility it provides. The main weakness or risk is the potential for dilution of existing shareholders. If shares are sold at a low price and the uncertainty of whether any capital will actually be raised. The company's direction seems to be one of planned growth or strategic positioning, which requires access to funding. It is a conservative approach to capital management that many companies utilize. They're not locking themselves into debt, but rather giving themselves an option to access equity funding when suitable. Alright, that is our breakdown of Newton Golf Company Incorporated's recent filing. What is your take on this at the market offering agreement and what it signals for the company's future? Let us know your thoughts in the comments. If you found this deep dive useful, hit that like button, it really helps us out, and subscribe for more corporate insights. And don't forget to join the conversation on our Discord server, linked in the description. Thanks for watching, see you next time.